Hi, welcome to today's update. I'm here with Josh Smythe. How are you, Josh?
Good, thanks, Nigel. How are you?
Very good, very good. Now, lately there's been a lot of talk about gold. So today we're going to talk about gold, but we're also going to talk about our process for anything like gold, where there's a bit of a talk or discussion around it, and how we think about that and how we bring that into our portfolios. So what we might first do is just talk about what's happened with gold, because it is topical and there's people queuing up in Martin Place as we walk down the road. So first thing is, what's been happening, Josh?
Yeah, thanks, Nigel. It's been a very good year from a gold point of view. We've seen some very strong performance. We've seen performance across all asset classes, but gold particularly has performed quite well.
Up 50%?
Over 50% this year.
We should have been in it.
I know. If only we knew.
So one of the big themes is, why do we not invest in gold, or why do we invest in gold, or should we or shouldn't we? So we'll just look at some of the data, I think, and look at how we process that. So our investment committee meeting is meeting tomorrow. We've got Steve Garf as our chairman, and he helps us put a lot of his data together. But when we think about it, obviously we don't want to be making short-term reactions to portfolios and suddenly saying to everyone, hey, let's go in, it's done 50%, let's get on board. But we look at the history. First thing is we go, okay, well, that's really nice short-term performance, but of course short-term shouldn't be our reason to add something. So what's happened over the long term, Josh? Yeah, do you want to explain this chart?
Yeah, it was quite simply, Nigel, if we just compare the gold price over time from December 1980 to today against the MSCI World Index. So essentially, the global index across all companies' shares globally. We can see the growth of just $1 over that period of time, over 45 years. Whilst gold has, performed well recently, we always take that data back as far back as we can, and we can see comparatively relative to that index. If we're in the MSCI world, our dollar's now worth 85, but if we're in gold, it's worth $11 or $12. So in context over the longer term, short term, gold's done quite well, but over the longer term, we haven't seen that performance realised.
Yeah. Really interesting. So long term hasn't outperformed. Doesn't mean gold might be the best performing asset class for the next 5-10 years. We don't know. But let's just look at some of the data and what's going on. Next slide there. We've got here the rolling 1 year return. So there are periods where gold outperforms, and there are periods where the markets outperform. And this is really interesting because it just shows the ups and downs. So obviously we've got a chart here which says the rolling differences when gold's outperformed versus the MSCI again. And then that long term average return, we've seen again, as per that other chart, the MSCI World, so all global shares have outperformed gold over time. But we've seen gold outperform here. So in these last couple of years, we've seen gold outperform. Hence, there's been a lot of attention around it and a lot of discussion around, we look at that and say, well, is it something we should add to portfolios? So what are some of the cons, I suppose, why we don't have gold? Josh, why wouldn't we have gold in a portfolio?
Yeah, I think coming back to the previous chart, Nigel, the first thing really is when we look at this chart, the length of these lines is a good indicator of volatility. What we can see across here, both above the line and below the line, quite long lines, and that's just representing when gold does perform either above the market or below the market, it is quite volatile, quite big swings up and down. So that's one reason we might not hold it. As we know, gold doesn't produce income or dividends either, so it's not an income producing asset, so we are purely relying on the capital growth of gold over time. Now, accessibility to gold was probably contributed to its performance as well. Yeah. Now we can access it through ETFs. We don't need to head to Martin Place at ABC Bullion anymore, even though we still can. So that it makes it a little bit easier to hold and less costly opposed to the traditional methods. So that's less of an issue. But I suppose the big reason that people might say we hold gold is an inflation hedge. But the data shows that actually over time, it doesn't hedge inflation that well. So it's probably, looking at the data, it's probably another reason we wouldn't hold gold.
Yeah, very good. And then there are reasons to have gold. Like it's a genuine asset class. So we're not talking about some new thing, some new cryptocurrency, anything like that. Gold has been around, as we know, since time began. Or just about. So it's got some positives. So we don't add it into our portfolios for this reason. We're analysing it. We're looking at it. Are we going to add it now? That's a process we go through, and that takes time. But if someone did hold gold, there are some positives. There are some good things around gold.
Yeah, of course. There is, over the last year, obviously the performance has been quite good. Historically, it is seen as more of a safe haven asset, so that does lean towards it as well. And obviously, it is an asset that's accumulated by central banks around the world, so seen typically a little bit more secure in that respect, and it can't be defaulted on. And of course, you know, ties in with that is the demand from institutions, central banks around the world. So there is that demand being driven at that level too.
Yeah. And the interesting thing, of course, is that most portfolios hold gold by default because there's a lot of mining stocks in portfolios, and a lot of those do have gold exposure. They might be pure gold miners, or they have some gold exposure. So there has been some exposure picked up by default. The listed equities market has a lot of opportunity. We tend to stay there. We tend not to go into unlisted space for all sorts of reasons. So I think today was important just to talk about it. It's a great topic to talk about, but also just so you understand our process and how we evaluate an asset class, whether it be gold, whether it be shares, whether it be crypto, and how we bring that to the table so that you know that we have got a very strong process around adding investments to any portfolio.
Yeah, always comes back to the data. Do look at these themes as they appear, but we've got to bring it back to the data and fundamentals, and just fundamentally see if it will add value to our portfolios. And at the moment, just doesn't seem to make that much sense.
Great, thanks Josh.
Thanks
for listening.